Hey traders, Dennis Wilborn. Did you know that trading bear market rallies can be one of the most rewarding, but also one of the most dangerous things you can do in the market? I've got 5 tips today we'll cover in the session that's going to talk specifically about how to trade bear market rallies without getting mauled by the bears. So let's jump into today's session right now. So it is the 23rd of June, just about a week or so until we are done with the month of June. 6 months in that it will be basically in the record book. And now we're looking at where to from here. One of the things I want to remind you that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. We'll come back to this page in a moment. Let's take a look at what the heck is going on with the indexes. One of the things that SPY, remember, this is the third day of a reduced trading week, and the supposed rally started like last Friday. We gapped up and then have basically kind of gone nowhere over the last 3 days. A lot of noise out and about. Everybody's paying attention to what Powell is saying about the economy with the potential of a recession and higher interest rates and all that kind of stuff. A strong headwind for the market to basically be able to sail into. One of the things to keep in mind, I should point out a couple of things here. See this volume as it's decreasing as we're going up here? That is not a sign of strength, trust me. We do have the TSI that has crossed to the upside, but again, on a very kind of shallow momentarily. And so basically, I'm looking at TSI has crossed over, but oftentimes you will get a pattern that looks like this. We'll move up into the moving averages, and then and this is the rally attempt, back up into the 20-day mean, and then it'll reverse from there to head further down. We want to watch it in, like I said, I am not buying this at this particular point until I get some retesting down in this consolidation area, or we get a hit the 20-day moving average or close to it, just has to be around it, and then that reversal. That reversal right there is what we want to be looking at for a potential downside trade. One of the things that I will cover in the session is, why do we get these bear market rallies? As I said, bear market rallies can tend to be quite strong. What does that mean? That means that that some of the largest bull rallies happen in bear markets, but you have to be agile to be able to take advantage of it. And so you'll get a pull up of about 17-18% on the leveraged ETFs, and then you'll reverse down from there. So again, you got to be quick. We'll cover those the specifics on that here in a moment. Okay, NASDAQ, the Qs. Okay, as you can see, the Qs. See this high right there? Okay, we are not pushing back up through that yet. Notice that the moving averages will start to work as what resistance to fight the buyers as they go up. There'll be a pool of people who bought close to these lows here, then a gap down across them. That's where we can anticipate things falling down from there as the price action gets up into those areas. The people who bought there are just sitting there going, thank my lucky stars, I can get out for break even. They do that and the sellers come in. One of the other reasons why you get these bull market rallies is because the short sellers are covering their shorts at a specific profit target, and therefore they'll get the buying come in, and then they'll all of a sudden they're still bearish. And so what'll happen is buyers will start jumping in, buying off these people's shorts, and then they'll go wham, hit that moving average, and downside, here we come. Moving out the volume way below average. The Russell looking kind of the same way. I've got let me get rid of some of these lines in the Russell. Right now, I really like the Russell, as you can see. Do that. There we go. Similar type situation as we've made this we would consider this a bear flag as the Russell moves up towards it hit the 8-day moving average. It may not get over the 8-day moving average. Yes, we have a TSI tick up. But look to your left, back over here. What happened the last few times this happened? You get your reversal signal, you would roll up, rally attempt, fail, down. Hit your new low, rally attempt, conversion on the TSI, fail, down. Rally attempt, and this last rally attempt actually worked out pretty good in that you had a higher low, went on to a higher high, but then we blew that out of the water as we came down and made this new low right there. So that's what I'm looking at for the Russell and all the other indexes. And I'll be looking to, as I said, I'll be looking for a move back up into the 20-day moving average. May not make it, but that's where I think the bears will jump back in to sell off. It may be right where it's at right now, but let's just pay attention to what are the indexes and what are the oscillators telling us. And so that's what we've got for the, and I do not have a stock for you today. However, I do have 5 tips for how to trade a bear market rally. Now, this is not an inclusive list, but some of the things you want to keep in mind. 1, follow your written rules. If you don't have written rules for how to trade a bear market, don't trade the bear market. Develop your rules, backtest it, utilize On Demand from Thinkorswim as a platform to test out your hypotheses, and then understand what's happening with a bear rally, as I covered earlier. It's primarily shorts covering their short positions, which makes it appear like there's a big buy going on. Then people will jump on board that, and it turns into what we call a bear trap, and the bear comes back and just slaps the snot out of you. Moving averages become dynamic resistance. Look for them. Basically, they go into catching mode, and they stop the progress as the price action moves up. Search for stocks that are holding up better than the market. You'll see that there's fewer and fewer of those. And so what is better than the market? The market right now is below the 50-day moving average and actually below the 200-day moving average. Look for stocks that are above and in an uptrend above their 50-day moving average. Trade those as long as they meet your other criteria. And that's what I find when I trade the IBD type stocks. I find those stocks that fit that criteria, and I stay away from the ones that are in a supported downtrend. Number 4, rather than going for stocks at all, trade the index ETFs and also a few sectors. That's what we do with the AutoPilot Trading Service, is we cover the ETFs and the leverage ETFs, providing us the luxury of being able to, if the index is going down, we can actually trade the inverse and it's going up. There's fewer variables, and so that makes it a much more solid craft to be able to ride in. And then number 5, lower your expectations of profit targets and stop loss levels. If you're used to using a stop loss of 7 to 10%, move your stop loss up to 5%. If you're used to using a initial profit target of 10% to 15%, reduce it. Make it 5 to 7%, 7.5%. That way you're still taking out your profits. At the same time, though, you're making it happen much more quickly, and it protects you against that market that says, you know what, I'm out of here to the downside. And as we saw the chart, let me go back to that one chart. What happened here? Look at that breakaway. Gap down, gap down, gap down. And so it protects you from that when you take your profits and get the heck out of Dodge. So that's what we've got going on for today, guys. I hope you have enjoyed this session. Do me a favor. In the comments, put in what stocks you're trading, and or just say, whoopee, I'm all in cash. That's a good thing. Also, give us a good thumbs up, because that does drive the algorithm that helps people support the Market Tech Talk YouTube channel. Again, let me know what you're liking about these new shorter videos and what you don't, and how we can basically provide you higher quality information. So aloha. God bless. We'll be seeing you tomorrow for Trade Your Way to Wealth and Financial Freedom at 11 o'clock Pacific time. And you can get on the streaming video on that on the YouTube channel, Market Tech Talk. Aloha.